Hello, everybody. It's Dan Basse on the 31st of October. Happy Halloween, everybody. It's Friday. What a week it has been. We've seen the grain markets lurch upwards. We've seen a decline, if you will. We believe that we're forming a significant top relative to the U.S.-China trade deal. What do we know for details of the trade deal? Well, as it's crystallizing more and more, we're starting to understand that maybe the purchase agreement from the U.S. and China is that indeed it would say that we need to make 12 million metric tons, or China needs to make 12 million metric tons of soybean purchases by the end of January. Now, whether those soybeans ship this crop year or next crop year is up to the Chinese. We'll see how that all works, but we are not of the understanding that the soybeans need to ship by the end of January. Also, we're understanding that China put back its tariff on U.S. soybeans. That tariff is now 13%. That's down 10% from where it was before, but this works out to about $56 a ton. So it's prohibitive. Along with that, we saw a sharp fall in the Brazilian market yesterday. Soybeans down anywhere between, let's call it 10 and 50 cents a bushel on basis. That puts Brazil's cheaper than the United States from today all the way through June. So if you other destinations in China are looking for soybeans, it will not go to the United States. It will be sourced out of Brazil. That's a significant change. And we now believe that Brazil has enough soybeans to make it to the new crop harvest. So last year's Brazilian soybean crop was obviously understated, maybe by the tune of 3 to 4 million metric tons. So all of that's very important. And crush margins in Brazil have been very, very bad. Now, we always say at Ag Resource that China buys what China needs, no more, no less, and from the lowest cost seller. So with that in mind, China will buy some U.S. soybeans. I think they'll buy enough to keep the finger wagging from Washington and the Trump administration at bay. But again, these are long-term purchase commitments. There's no penalties. These are not binding. Again, the Chinese will buy something just to keep, of course, the United States happy. But I do not believe we'll reach 12 million metric tons, nor do I believe we'll reach 25 million metric tons in a year ahead. This is all against window dressing. And again, if Brazil is cheaper, China in many of its contracts, though again, we can't look under the hood of this contract, usually has clauses where it says if there's another seller that's cheaper than the United States, they buy it there. So overall, as we look at this agreement, it's nice. The markets hit a great rally. The grains were not included, maybe a little bit of sorghum, but again, I can't confirm any purchases. China's bought about, let's call it 7 cargoes of U.S. soybeans. That's about 450,000 tons. We'll welcome that demand in terms of coming forward, but I do not see this agreement as being a panacea for the U.S. soybean farmer. Unfortunately, China never really keeps its promises on buying soybeans or other grains. We have a lot of history of that going all the way back to 2001 with the WTO agreement, and I'm really doubtful that China will do the same today with, of course, Brazilian soybeans being a lot cheaper. Other news is lacking in the market, though South American weather looks just optimal. So the Brazilian farmer is, again, seeding in very good conditions. We would imagine that record large crop numbers for Argentinian corn and Brazilian soybeans will continue to circulate. Have a good weekend, everyone. What a week it was. The U.S. farmer rewarded the market very strongly. I think that was the right move. Let's see how this all works out in the weeks to come. Dan Basse, of course, wish you adieu and wish you a great weekend going forward.